Hello everyone, this is Kim Lei with A2Q2, and in this video I'll share with you the recommended activities for a company that's preparing to go public or preparing for a SOX readiness initiative. And in this video we cover the tax process. I'll share with you the typical activities and the typical sub-processes or areas we recommend you cover. So the typical activities that we would look at, or any company would look at when you're preparing for a SOX readiness initiative, is assessing your control gaps. That includes conducting interviews, understanding how the current process works now, where the gaps are to be a public company, the typical controls for a solid internal controls environment. And after that, you're going to be documenting the processes and the controls. You do it either by flowchart or narratives. Historically, narratives were the most popular, and in the last 2 or 3 years, flowcharts have been more popular because of the PCAOB's audit of external auditors and asking more about process flows. And so external auditors have been asking our clients, and so now we've shifted to flowcharts so that it aligns with your external auditors. You can leverage it for your financial statement audits as well. After that, or in conjunction with that, you're creating your risk control matrix. Your risk control matrix is your RCM, and that's a listing of your key controls and non-key controls for that process and what could go wrong, addressing what could go wrong in there. We then recommend that you do a walkthrough. Not required, but a walkthrough is so helpful because a walkthrough is a show and tell of the actual process from initiating a transaction all the way into reporting it, how it gets into your books so that it gets into your financial statements at the end. And what typically happens is when you're in an interview and an inquiry, you're asking someone how they do it. They'll describe the 80% scenario that's on their mind. When you do a walkthrough with a specific example, more details come out. You're able to refine what the control should be, what the actual risk is, and tailor it and really get it very focused rather than a general review and approve. Now you can say review invoices for date, timestamp, for amounts, for totals, for various criteria, and really get granular on that, which is really needed later on in your SOX process. And then finally, there's the testing. When you're in the readiness phase, we do not, testing is optional. We don't have many clients who actually get to the testing stage because they've spent so much time, and rightfully so, designing the control, putting the control in place, training process owners to do it. And so by the time the end of the year comes along, most of that process is now, or most of that time has been focused on getting that process in place. Now let's talk about the sub-processes that are typically covered under a tax process. So we get an overview of the tax scenario, meaning what are the different locations and different jurisdictions. Our clients are all technology companies, have some type of technology component. So typically there's a parent company and then multiple subsidiaries. What are those legal tax entities? The tax entities are different than locations themselves. So getting an overview of that and capturing that. There's then the tax compliance, which is really one of the lower areas, and that's just filing tax returns. And in this case, we're focused on income tax returns because most companies that's one of your largest potential liability. And because our clients tend to be technology companies, there's not a lot of income until much later in the stage when when the revenues have been much bigger. And so then we're focused on the income tax provision. Now there is some, even though most clients are in a loss position, there is some income tax provision because of the different jurisdictions. So in total you may be a loss position, but certain states, certain geography, you might have taxable income, and that's why it's important to do a tax provision and reconciliation. Most technology companies have outsourced this tax function, because as in the early stages of preparing to go public, your tax team may not be large enough, may not have all the expertise that's needed. Again, it depends on your industry. Some clients who are heavy into um, e-commerce where taxes is a big deal, then having a tax team is very normal. Manufacturing, some of the more mature companies have it, but at the earlier stages of being a public company, it's fairly rare that we have a full tax team in place. Next is going to be your sales use VAT tax. So VAT is value added tax. So the sales and use tax is very typical. Historically, when you've been a SaaS company or a services company, it wasn't an issue. Now with the different states taxing electronic commerce as well, sales tax is something that you want to consider. Do we have nexus? Do we have liabilities? Because again, you may not be collecting it, but it means that you need to put that liability onto your books. And so understanding that process, and if you're conducting business outside of the US, that is very important, or GST, goods and services tax. If you're conducting business in Canada, how are you collecting that, or at least assessing, do you need to collect that and remit that? And then finally, if you are using a tax tool of some sort for your part of your business. So Avalara is a typical one to calculate taxes, remit, and file your taxes. Then you want to look at the system, who has access to that system, who can make changes to it, are the tax rates accurate, and also getting a SOC 1 Type 2 if you're relying on a software or a service provider of some sort. This does not apply if you're hiring a firm to calculate your tax calculations, because that's typically fairly manual. It's only if you're relying on a software program itself that we're using the SOC 1. So that gives you an idea of what to discuss and document in your tax process. Have a great day. Thank you.